Holy crap, you're here already? Hey T,
Hi, Bud.
how are you, darling?
How are you?
Good.
I'm good.
You got to class early.
I know. My question's the same as Irene's. I don't know
Yes.
when to sell these things, so I'm anxious to hear because I'm sitting there thinking I want to buy more, but I don't know what the hell to do with the ones I got and
Well,
when
I
to do
mean,
it.
there's, um, you've got more money. Okay, so you don't need to do anything with what you've got. You just want to buy more because, I mean, you're buying things with a long-term horizon,
Mhm.
and if you're doing that, then you kind of have to stick to it and give yourself the long time, you know.
Okay.
But of course, that's also not like, okay, well, go take a nap. That's it. Wake up,
Well, that's what I feel
whatever.
like. I feel like I
No,
just did it and forgot about it.
there's basically, when you buy something, you should view that as you're just opening that position. You're just starting that. It's not like, I mean, your initial, I think buy was like what, 20,000 or something, or I forget what, or 12,000,
Yeah.
or,
No, I
whatever.
put like 25 in. I bought, 5 or 6 different things.
Right, right,
Most of them are January 23.
right. And I think you have like what, 4 or 5 things, Bank of America,
Mhm.
Wells Fargo,
Yep.
maybe
Apple.
Berkshire, Apple. I don't know if you have any of the Bitcoin thingy.
We do.
Uh,
I have
okay,
Bitcoin, but I have stock
okay,
and I have Lloyd stock.
okay. Awesome, awesome. So, what you can do is, my recommendation for just regular folks for whom this is, for home gamers, is keep it to about 10 different companies. Don't try to, oh, hey, I heard this. Oh, hey, I heard about this one. Oh, I heard about that.
Yeah.
And then you end up with 50 things and you've got like $1,000 in each one. And, it's meaningless. And most of the companies are bullshit little companies and all of that. So if you have 10 companies that you decide these are the 10, and these are basically companies that I'm comfortable with, through thick and thin, where it's not like, oh, hey, buy airlines for the next 6 months because they're back,
Right.
or buy this, where it's like basically
Right.
like, hey, this is going to make me money forever.
Right.
Some years it'll make me a little less, some years it'll make me a little more, but it's always going to make me money. Hey man, how are you? So it's, and then what you're basically doing is you can just keep adding to those positions. Or as new positions open up, like for instance, like you said now,
Mhm.
most of your things expire in January 23. You know,
Yep.
Apple now has options that expire in March of 23.
I've bought
Um,
some of those too. I
Right.
bought.
Pretty soon they'll have ones that expire in June. Soon other companies will have things that expire further out in March. If you are like, okay, hey, there's no reason for me to never own Apple, Bank of America, Google, Amazon, whatever it is, then as these options open up further out, if you've got money, you're buying them. If there are no further out options for the first year, you know, you can pretty much just keep buying more of the same.
Yep.
You know,
But back to
uh-huh,
Irene's question, though, when do you know, like it's a year from now and it's January of 22.
uh-huh,
So when do you start looking at, like Irene pretty much asked, okay, so now when do you start looking, or how do you set a gauge to say, okay, I got to keep an eye on my Berkshire because it's coming up in 9 months and I need to do something. So what am I looking
right.
at
Well,
mostly to say
well,
this is when my something should happen? So wait till Irene's on if she's not on yet.
that's
Come
all
on,
right.
it's her question. There you are, because my question
What
was
the
your
hell? You
question,
like came
Irene.
on and Rob
Like,
disappeared. What'd you do? Throw him out or something?
He's there. I see
keep
him.
doing.
Do you? Okay, I
Should
only
throw him
got
into the
three.
golf?
Okay, there
Should
we
throw
go. There
Rob
you
into
go.
the golf?
Hey, Amar, how are you, man? I think anyone can. Oh,
Good, how are you?
yeah, good. Rob and Wendy, are you guys like hunting, or are you just hunting? Are you guys hiding out from the man? It looks like you're somewhere
No,
like in the
well,
woods.
if we were hiding out from the man, this
Yeah.
would be the place.
Okay, cool. All right.
In fact, there are people who live on islands out here that are either fishermen or fugitives or both.
Or both. A lot of fishermen in Florida are generally fugitives.
They might also be CEOs of electric car companies.
There you go. Easily confused. All right. But, okay. So, first of all, look at what you just said, hey, it's now January of 2022, and in 9 months, something might be happening. If the Titanic had that kind of forewarning, they would have missed that fucking iceberg,
He'd all
so-
still be here.
Exactly. The question of when, it's basically when do I sell? And that's all that's unfortunately, there is no break even. There's that, bulls make money, bears make money, pigs get slaughtered. Okay. If I wasn't a pig, I wouldn't have, not all the time, but I wouldn't have like 7,000% returns. And let me tell you, all you need is one 7,000% return for it to make a decent difference in your life. So people who say don't get greedy are usually so fucking rich as a result of having gotten greedy in the past that now they're afraid of losing it. So they're like, hey, don't get fucking greedy, but to get that far, they got greedy. So there is no simple answer to that. Here's how I generally look at it. If I've got something that I'm holding for 2 years, the first year, I'm just building. I'm just adding, unless it's like, it starts to really run tremendously. And I'm like, well, I'm not going to keep paying more and more and more for it, but even if it drops and all of that, and sometimes it'll drop hugely. I can have a position that I buy, let's say at 10, and over the first year end up then buying it at 2. So I'll just buy it at 10, buy it at 8, buy it at 6, buy it at 4, and keep buying it and keep buying it and keep buying it, because I can still make the case why it's going to turn around. And just because the option went from 10 to 2 doesn't mean that the stock went from, let's say, 60 to 20. What is my strike price? What is the general momentum of the stock? What is the basic story of the stock? It's kind of like a year ago, every company took a shit, but it was easy to look at the market and be like, okay, what's going on? Which companies are really going to be getting destroyed? And which companies is everyone going to go, oh, wait a minute, holy fuck, this is where the tremendous opportunity is. Whether it be Zoom, CrowdStrike, Square, even Apple, all of those things. The most important thing is investing. Investing is a long-term proposition. This is why I always say, you got to get more money. You got to find more money, because the key to investing is to not sell your shit for as long as possible. It's why, even Kramer, with whom I have a very conflicted relationship, will say about Apple, invest it, don't trade it. Just keep buying it, keep buying it, keep buying it. But because I deal in the world of options, I have, a finite time frame. I can't just forever. I got to get rid of it at a certain point because it expires. So that's why fundamentally, like I said, come up with your core and just ride those. If you feel the need to be in cyclicals, and that's what they are. They are companies that have cycles. Okay. Whatever it may be. We're mining company, copper's on fire for the next 6 months. Oh, we're a cruise company. We're coming out of the pandemic for the next 6 months. You know, oh, hey, we're a semiconductor company. You're going to need our shit for the next eternity. Oh, we're a gigantic global bank. You're going to need us to finance shit around the world for eternity. You know, it can also be like, oh, hey, we're Dear Caterpillar. We're a gigantic construction infrastructure company. You know, infrastructure is cyclical. However, infrastructure is a cycle that lasts 10 years. So it's like an investment, you know, but then you can also look at it and say, oh, okay, Deere and Caterpillar are trading at PEs that are higher than Apple. Do I really think a gigantic equipment manufacturer that sells one unit for $150,000 to $250,000 is really going to maintain that kind of revenue growth versus a company that sells shiny things for $1,200? You know, so selling is your decision. Don't be in a rush to do it. I know on a certain level, it's like, hey, I've made some money and now it's dropping. First of all, 40% gone immediately. You sell it, 40% is gone. That's the taxes. You know, short term, that's that. Now, hey, if they do their tax thing, that might also be the long-term thing, in which case everyone becomes a short-term guy. And if you have something that runs up a bunch, you get rid of it. And that will definitely change the whole market dynamic if that happens, and I don't think for the better. But while that's not the case, you want to try to plan to hold your positions for a year and build them during that year. You know, obviously, if it's like, okay, the story's broken, you know, whatever it may be, the story is broken, then that's the reality. Then you get out, you either pocket the gain, you take the loss. You don't think, oh, I'll dollar cost average, and simply by doing that, the story will change. It won't, you know, it won't. So, but if the story is consistent and you have more than a year, it's okay to add. You know, it's okay to add. And like that's what I'm doing with some of my apples, especially like the 180 or 210s that expire in January or March of 23. I'm down like 50% on them, but I've got like 2 years left. So I'm going to spend the next 5-6 months being less down on them because they're not going to, Apple's just not going to drop that much more unless the story breaks, you know, unless the story breaks. But that's not really that foreseeable. Yes.
Can I ask a question right there?
This
is kind of right up the alley of what we were asking about. So we're in the same exact position, right?
Yep.
And I don't really want to focus on that one. That's not my point, but I'm trying to understand something. So it's been about 4 weeks ago when the market was, when Apple was pretty far down. It was somewhere in the 120 range. We both Wendy and I reinforced our positions right around, we'll say 200, whatever, 200, 210. Price average brought that down. You were actually spot on. We brought it down to about 26% overall because we bought lower. But we're right back at 50. What did you say at the time? You're like, hopefully you won't find yourself right. Almost immediately at the same time, you bought into some options at a lower strike price. And that was kind of one of my questions, right? And that's one of the things I'm trying to understand. And I get why you did it. If you can buy at a lower strike for the same price that you paid for the higher strike a month earlier, why not do it? And I guess my question is, I'm trying to understand why you would be in both positions, and should we be building positions at lower prices when we can, lower strike prices when we can, versus driving down the price on an existing position?
Yes to both.
And how do you make decisions? Yeah, how do you make decisions?
You know, what usually happens is
yes to both is interesting answer. I didn't expect that.
Yes, what usually happens is this, okay? You'll buy like the 210 when the stock is like trading at its high, like at 140, because you're like looking around, and you're like, okay, the stock's got momentum. I want to buy some more further out. So you go out and you start looking, and you see that the furthest out, the least expensive, is around the 210 at that time, and you essentially buy it because at that time the stock is trading at a high. There's momentum pushing it forward. Options are going up in price, and now it's the a new expiration date, whatever new factors that bring something in. So you buy it. For me, sometimes I buy things knowing that I'm not getting a bargain, knowing I can wait and I'll probably get it cheaper. But for me, rightly or wrongly, it's just me. It's more important to assume a position, to get my toe in the water. A couple of weeks ago, I bought Square. I had buyer's remorse on the day that I closed the Square position, on which I was up a ridiculous, insane amount. And as soon as I was like, fuck it, I shouldn't have done that. But I didn't want to go back and buy the same thing, because that'd be like, oh, I just had that go from 4 to 40, and now I bought it for 40. That's stupid. So basically, to make myself feel better, I bought the 360s expiring in January 23, when the stock is trading at like 210, 220, having run, from like 50. So I don't even think it's going to get to 360. I don't. But I bought those and I paid like $36 for them. 2 weeks later, they're trading at 19. Okay. I bought them again, and I'm not regretting that I bought them at 36. I needed to buy them at 36 to assume the position, to get my toe in, knowing that I'm going to average this thing down, and I did it once at 19, and then I did it again at like 20. And even though that was greater than 19, it was still a whole lot lower than the original 36. So now my average is around 23, and the option is trading right around there. So instead of being insanely underwater, having just bought it at 36 and been like, fuck, it bounced from 19 to 23, but I'm still down a shitload because I bought those 2 additional buys. Now I have a position that is 3 times what my original position was, because each time I would be buying like, the original investment. And now I've got 3x the position, and I'm at break even. So now I'm like, okay, hey, I don't need it to go up to 36. And now if it does go up to 36, I'm way in the green, So that's why I say both. Sometimes you want to get into a position and build it, but at a certain point, you've also built it enough and you're like, fuck, I'm underwater a lot on this thing. But because that's still so underwater, other things that are now below it have become more affordable. So I buy those. That's why, like, for January and March of 23, I have the 160s, the 180s, 140s, 210s, and I would just like be buying them as they became, correlative to the price that I paid previously for a higher one. Where I'd be like, okay, cool, let's do that. And then I would just like it, there's a lot of it is just instinctive. Some of it's just like, hey, you know what? Oh, I've got 50 of these, but only 20 of these. Let me buy a couple more of these to even it out. It's a lot of the time you kind of also have to realize that with investing, if you ever have conversations with poker players, the shit that they say, you're like, but why? And they're like, yeah, because that's what felt right in the moment. So it's like there's no concrete explanation for it. But hey, Sasan, I'm going to move on to you because it looks like you might be getting close to your destination.
No, I got a good 45 minutes, but I'm happy to go next.
All right, go. I've
want
got
the
the,
question?
I've got the ass blaster.
Go easy on me. I'm gonna crash the car.
Right.
Drive safely. I don't know.
Protect your
Should
back.
you be going?
I might
No,
ass
look,
blast you off
I'm
the
in,
road.
I'm in Texas. There's like, it's like just a straight road in the middle of the desert.
Oh,
Right.
okay.
So,
Dude,
so
just,
even if I
just-
crash, there's nothing to hit.
well, watch out for the migrants. Watch out for the migrants.
They run fast. Don't worry.
All right, cool, cool. And they know how to bounce off the cars.
Okay, so for my question, I mean, earnings are coming up, and I've only been doing this, for whatever
Yeah,
since September. So there's really 2 earnings periods that I was conscious for, and
Right.
During those periods, I feel like, and I might be wrong, but the first one seemed to behave, third quarter seemed to behave differently than fourth quarter. So it seems like third quarter, it went in, people got the companies that got good earnings, the stock continued to run, was running or continued to run or
What's
started
your
to run.
question? What's the question?
The question is, then the second time, it seems like the companies that did the best took a dump. And now that earnings are coming up, I can kind of predict which companies are going to have good earnings, but I can't predict how people are going to respond to that and whether or not it should affect any of the investing I'm doing.
So what's normal? What's the normal reaction? I think, right? That you want to know which one is the one that usually happens.
Yeah, exactly. Or is
And-
there a usual, or, I've got 2 opposite experience with the earnings.
Mhm.
You got what?
I had 2 opposite experiences.
Oh, okay. I
Third
thought you said
quarter
you had a couple of
earnings.
options that expire at the,
Yeah,
okay, first of all, first quarter, second quarter, third quarter, fourth quarter are only things that have a chronological sequence to us humans.
Right.
Apple their fiscal year might start in March, another company starts in January, another company starts in September. They have different cycles, so not everyone is in their third quarter in September. A lot of companies, it depends on what they sell. Certain companies might have a great importance for back to school, for holiday, for whatever. Other companies, I don't know, may have other seasonal drivers. So that is something, if a company you're invested in has seasonal drivers, you obviously want to be aware of if the season that's being discussed has that in play. Okay, there are a couple of ways that stocks can behave during earnings season. They can run up into the earnings, or they can kind of almost be beaten down pre-earnings. And that kind of allows them to either it's the kind of sell the rumor, buy the news, or buy the rumor, sell the news. Okay. If the expectation is, this company is going to do great, their earnings are going to be awesome, and the stock is running up into the earnings, even if they come out with stellar earnings, well, okay, that's what that was expected. We already ran up, so let's sell some shit, as opposed to, they're going to suck. They've got no interesting products. Nothing's going on. Here are the earnings. Holy shit. And the projections are through the roof. Ba-boom, hockey stick, So you kind of have to take a look at what is the company doing pre-earnings. And what is its behavior? What is the chatter? And if it's a company that is a fast mover, a tech company, these are things that can on earnings move 5 to 10%. Depending on the size of the position, you may want to take something equal to like 5 or 10% of that position as a short-term secure insurance, buy puts, something like that. I don't want to go into more complicated ones, but that's something that if anyone has a portfolio of $50,000 or less, they should not be buying puts. Okay, your shit takes a hit as a result of earnings, you buy more. Okay, that's it. When you have a shit ton and your intention is not to keep building the position, then, you might be like, even though I know in a couple of months I'll be back where I was or even higher, this is an opportunity for me to maybe catch a falling knife, because that's in essence what you're doing when you take an insurance policy. You're either saying, okay, I'm spending this money, but I sure hope I lose it all, or you're saying, I'm spending this money in the hope that something bad, but not long lasting, happens to my overall position that'll allow me to profit on this short-term downside protection while, letting my position go. But if you don't have a big position in it, it's better to be like, instead of buying $2,000 as protection against the 10,000 position, spend that $2,000 buying more of the position when it goes down. I don't know if I answered your question at all.
Yeah, no, absolutely. No,
Dude, you sound retarded. You sound retarded.
Can you hear me? That's just how I sound. Can you hear me?
Yeah,
Yeah,
much
you're back.
better.
Okay, good. Yeah, so I mean that was part of the question with a concrete example, and then a question would be like Apple. Third quarter, their earnings were good and their stock went up. Fourth quarter, their earnings were good and their stock went down. Which one is more the rule rather than the exception, or is it just something with the holidays and timing with the phone and things like that?
You have to also put things in their context. Okay, Apple is a $1.5 to $2.2 trillion company over the course of the last year or so. It's also a stock that has by and large moved sideways for the last 6 to 9 months, which is actually an amazing thing. A lot of people are like, oh, what the fuck, stock's not doing anything. What it's doing is it's wiping people's memories. Okay, it's making them completely forget that the stock was available not that long ago at much cheaper prices. Pretty soon, when they start looking at the 52-week high and low, they won't see 52-week low of 60 or 70. They'll see 52-week low of 115. And then they'll be like, fuck, the stock's at 122. Shit, it said it's almost low. I'm going to buy some more. And oh my God, look at that. The earnings are coming up, blah, blah, blah. And it's interesting when you hear them talking. Apple's going to have a very, very nice quarter. They're going to have a very, very nice quarter. Facebook's going to have an amazing quarter because these companies have been talked to death. They're like, oh, tech, there's shit. Oh, Facebook regulation, blah, blah, blah. And you know what? It's all bullshit. While all of these people are talking this shit, they all have positions. They're all building those positions and all of that. They just don't want you to buy it now. When the stock starts running, that's when they're going to be like, yes, I highly recommend it. I highly recommend it. Even though they're supposed to disclose and blah, blah, blah. But everyone talks their book. Everyone talks their book. Even me, I'm like, hey, buy Apple, buy the banks. Not because it's going to push up my shit, but that's what I know. That's what I own. That's what I talk. So this is going to be the year of mega tech stock and banks. And when I say year, I mean about the next 3 to 5 months. Okay? Because we're now, and this is all wonderful, the infrastructure, blah, blah, blah. But pretty soon we're going to have to start having serious conversations about taxes. Okay? And the taxes are coming. They are coming. It's Game of fucking Thrones. Winter is coming. The only question is, are they going to be retroactive? Are they going to fuck everything up for 21 or, 22? So that's it. So, That's why I'm like, build, build, build. Find pennies, get them out of your couch, get portfolio margin, whatever you need to do in order to increase the amount of money you can deploy, do it. Okay, now that doesn't mean that in 6 months the market collapses, blah, 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 because first of all, the market goes up more under Democrats, and the market can actually go up pretty a lot under increasing interest rate environments also. I know that's an Amar concern. You know, so that's it's just have your shit, just have your companies, be knowledgeable, don't chase dreams, don't, you know, especially not with the core of your portfolio. You know, you want to play in the future stuff, absolutely, 10%, 10%. That's it. You know, because that 10% can become worth a shit ton. By the way, I'm about to get into Ethereum. Decided to do that. Well, spoke to a couple of people, and it's also shooting through the roof, and et cetera, et cetera. So I said, why not? And it's also
I bought some Ethereum.
good for you. So you're profiting off this giant jump. I know you
Yeah.
mentioned it. Bravo. And that's obviously just because I'm an old fuddy-duddy and I'm like, nah, don't do that shit. You should be like, fuck you, Vadim. I'm getting that shit and I'm gonna stick it up your ass. You know, so but you know, sometimes that'll happen and other times it won't. But that's life. So what? Yeah, so I think Ethereum and the Grayscale has one. I think it's ETHE or something like that. I'll send the symbol. I checked with a couple of folks who are in the know. They believe that Ethereum has quite a ways to run.
Yeah, that's what I think.
You know, there's people talking that Ethereum, which now is at about 2,000 versus Bitcoin's 60.
60, yeah.
Ethereum can get up to about 30.
I actually bought the
You know?
Ether itself. I bought a few of them, just the actual tokens.
Yeah.
Yeah, so, you know, just
Yeah,
that's where I am at.
Yeah, I for the same reason I don't like buying things for thousands of dollars each. I'd rather buy something for $18, you know, and kind of
Yeah.
do that. Okay, Amar has not spoken.
Hey, how's it going?
Good.
Sorry, I'm outside, so I had you guys on mute.
Okay.
Hold on, let me let these motorcycles go by. So yeah, I know you said I pay attention to the interest rates, and that's true.
Yes.
Mainly because I'm also doing real estate stuff, and that really gets affected by it. But I guess I think you kind of talked about the question I had already, so I didn't want to bring up something redundant. But as far as opportunity goes, I actually changed my mind on something. What about, have you thought a lot about Affirm before?
Who?
Affirm, AFFRM.
That's Max Levchin.
Yeah, that's his company. And basically, if you go on Shopify or Neiman Marcus or even Peloton, you know, it always gives you that option of, hey, pay 3. Don't pay it all now.
Right.
Pay us 3
Right.
payments, whatever. And so he's been really pushing on that. They've been getting a lot of good contracts. The stock still isn't making any money yet because they're still in the investing. I think it was like negative 13 cents a share. Their cash reserves are okay, but I'm not great at valuing things.
You know what I
long-term.
mean? Listen,
So-
I took a look at that, and I'm a huge believer in that guy. I think he's fucking awesome. You know, and that would be reason enough for me to take a position in it. I looked at it like a month ago. I haven't watched it in the last several weeks at least.
Yeah.
So it seemed to be kind of static. It wasn't really going anywhere. And I think that's kind of because it just got caught up in this general downward market cycle. It's definitely a stock that falls into the momentum category. You know, it's in the right place. It's a decentralized finance thing. It's the hot finance shit and all of that. But
it's a square, you know, in a lot of ways.
Yes, but not. Once you start getting into financing and all of that, it's a different level of risk. etc.
Okay.
You know, and for me, it's a little bit more of a reach. It would be the kind of thing that if I already had positions in Square and PayPal and still wanted to go further into that, I would get him. You
Okay.
know, but everything's pretty expensive in that space. Square, like, you know, my example with buying the Square options, PayPal's not cheap. You know, Coinbase, I believe, is supposed to go public this week or next.
Yeah.
If I don't know how insane
Thursday.
it's going to be. Yeah.
I
gonna
heard
rock
some
it.
like funky things about Coinbase, actually. I've been reading about it. They've been having some problems. So I'm not sure. I'm a little like, I'm them as a stock.
Well, any
Yeah.
IPOs this year have been rocketing for no reason, and they're all very overvalued. Like I wanted Airbnb, but I mean, looking at their revenue and stuff, I thought it would be a good $50, $60 stock, but you know, it's
No,
already
well,
hitting
that's
200.
exactly right. That's exactly right. You have to look at what it starts trading at. Coinbase is something that I would like to buy within the realm of sanity. You know.
Yeah.
If it's not, then it's not. That's just how
What do you
it is.
think? A good
Dude,
what's a
you've
good
got
number for
shit connection.
Coinbase?
Shit connection.
I can't hear you, man.
Nothing.
Come to the
Nothing.
come to the Gulf of Mexico. It's much clearer out here.
Yeah.
Yeah.
I would say that the Square play is probably more of a play in crypto than something like a firm. So, because I think that what I was reading about was that Square is doing more payment acceptance in the crypto world. So I think when you're seeing the run there, they're not even comparable. Like PayPal's
Well,
doing crypto too.
I think none of those companies that are saying that they accept crypto are actually having a lot of people use crypto to make payments.
But as a wallet, I mean, not even just accepting it, but it's being used. PayPal, for example, and Square are to
Right.
be used as wallets for it.
Yes,
So that's
yes, that you
know.
can just buy them there and all of
Exactly,
that.
and hold
Yeah,
them.
exactly.
So that's not a firm.
Right. But at the same time, the crypto part is still more a PR part of their business than an actual, you know, bottom line part. You know, it's possible that it will become that further on down the road, but at this point, it's still more of a, you know, experimental thing.
Mhm.
And then, Vadim, I had two more for you,
Yeah,
two
man.
more picks. The second one was just plain old Visa. I mean, I'm looking at their, I know you don't like a huge long-term chart guy, but looking at their chart, they've been consolidating for a while now. They did hit their, you know, all-time high, I think, recently. And they're getting into crypto as well. I mean,
You know
Yeah,
what? I
Ether.
mean,
hot trendy thing, and they got their
lots
crypto
and
credit
lots
card.
of great companies. First of all, it's like there are lots and lots of great companies, just like there are lots and lots of piece of shit companies and hopium companies and all of that. Visa is a great company. Everything is about how much money do you have? You know, there are, I don't know, 30,000 investing options. Let's say you narrowed it down to 500. Wow, that's pretty awesome. But really, I mean, what are you going to do? Even if you have $500,000, are you going to put $1,000 into 500 companies? No. So you got to find the couple of handful, you know. Amar, if you're going to get into this as a full-time gig, you know, you should be 20 companies. Once you get over 20 companies, you're probably not really able to keep track of everything, you know. And if you keep it to 20 companies, then you're always have to ask yourself, okay, this company that I'm thinking about, it's not in my 20. Which of the 20 that are in there is it going to knock out? Because it can't be, oh, I'll just make it 21. Oh, I'll just make it 25. You know, because at some point you're too thinly invested. You're too, diversified. You know, you can be over diversified also. And then it becomes just an exercise in treading water, you know? So,
Okay. So you don't think Visa has an advantage over the banks, for example? You think the banks are going to have a better run up?
It depends on how much money you've got. It depends on how much money you've got. Me, I've got 5 banks. You know, I don't have credit card companies. I've got 5 banks, and I've got Square, and I've got Berkshire. So I've got that. I've often thought about getting into Visa. It's just that, you know, on the day that I
Okay.
thought about it, I never thought about buying it.
Okay.
You know,
And
so
then
it's more that.
And then my last one was just plain old silver. I mean,
I
obviously we
don't
talked
do those.
extensive-
I don't do metals.
You don't do metal
I don't do
ETFs?
metals at all. And listen, I'm just saying, I don't do them. I'm not passing judgment on them. I don't really know. You know, I know people who trade currency, and it's a hugely leveraged business, and they make money on that leverage. It's too complicated. It's, you know, shit that happens in the middle of the night. That's when I'm sleeping. I don't need to be involved in that.
Okay.
And metals are similar, and you know, it's like investing in platinum or something. I'm like, I don't know. You know,
I mean, the reason I was bringing it up, obviously, because of the stimulus and the fact that, for example, JP Morgan is getting, you know, gets fined every so often for suppressing the value of silver.
I don't even
because,
know
you
about shit like that. It's
Yeah,
too,
I mean, it just
it's
seems
too
like a
obtuse for
commodity
me.
that should be hot, but.
For
my
what,
other-
for
my
what
other issue-
reason?
Well, my other issue is that I think gold and silver should have been higher, but I think cryptocurrency has been taking money away from them.
Yeah,
Yes,
I just
So-
read an article that talked about like the billions of dollars when they're comparing of what's coming into crypto versus the actual
well,
pull from
but
gold.
that's, you know what, all of that shit, it's all generational, okay?
Mhm.
Young people are into crypto, they're not into Franklin Mint gold coins, you know,
Yeah.
or shit like that. And who knows what the next generation too is going to be into, you know, that'll make crypto look like gold and whatever. Okay, Rob, Tina, anyone, Wendy, Sasan, I don't know if we can hear you better. We see you
do I
okay,
get one?
but once you open your mouth, it goes down south. Yeah, Irene, go.
Okay, so it's a few things and maybe they're a little bit less specific. So one we touched upon and it is a question I had, but like I want to break it down to a more specific question that I have.
Go.
I know
Yep.
the answer is always whenever you feel like it, and I can't accept that. So I can't accept it. I just can't do it.
Okay, it's Tuesday.
So the question is this. So we're buying stuff. So we have some things that I'm buying with expiry dates out, like 2 years out.
Right.
And then other things that I bought that were like 13 months out. So
Okay.
when I'm doing a 13-month out, am I looking to get it toward the end? Because I've heard you say lots of times that you sell them a lot of
No.
times with those date. That's not
No.
the plan. So that's
No.
not the plan. Okay.
If it's not 2 years out, if it's not 18 months out, okay, or more, you're looking at short term.
Okay.
You know,
That's what I want to
mean,
understand.
you know, and it's like if you bought it at the 12, hoping it'll go to 20, and a month and a half later it's at 18, it might be good to, you know, to either sell your investment or something, because it's run really fast, you know, and you can wait for it to pull back and get in again and do that in and out dance like
Mhm.
that. If it's a slow and steady, then hey, you just hang on and you climb, and then before you know it, you're like, whoa, shit, I've got a month and a half to go till I'm in, you know, in the long-term land, so maybe I'll hang on.
I see.
But
Okay.
if I buy something that's like, you know, 13 months, 14
Yeah,
months,
you're not expecting it to go long. Okay,
no,
that's what
no.
that's a question I
Yeah.
had. Another question I have is with the banks. So I have a
Mhm.
lot of bank stuff. We talked about it. It was my starting position was in a lot of banks, and then I added to those positions. So I would say I have a good chunk of my money in banks.
Right.
I've had a kind of roller coaster a little bit with them, never down, so not a bad roller coaster, a nice roller coaster, but it's gone from like between 70% up to 250% up, and like it's still the year of the bank or the time of the bank. So am I still holding them? Like I'm confused as to with those that are having good runs but still have a good trajectory
Right.
about how holding them. What does that look like?
You got to go rewatch Wall Street. You know, I'm sorry, but it essentially comes down to how greedy are you?
I don't know yet.
Right, exactly. And sometimes you get over greedy and you're like, fuck, I lost it all. You know,
Yeah.
or, you know, and that can happen too. And you know what? It does. It happens to me year after year after year. But the great examples of unbridled greed far outweigh those ones that I overweighted, you know? And what usually happens is, like on ones that I got too greedy and now it's gone down, there's a good chance that I've got a position in the same security further out that's gonna make up for it. And it's like, you know, and then I just go, okay, well, that'll be a capital loss to go against, you know, the
Yeah, I
government.
think of that with some of my ones that I've lost
Right.
out on. I'm like, I'll just take it against my gains and it
Yeah,
won't be that bad.
exactly. And that's actually very good to be in that mindset fairly early on. You know, if you've got something that is a 2-year out expiration date, and within the first couple of months, you're up like 250, 300% on it, take your investment out. Okay? Just take that out. Then it's like, hey, not my money. Let's see what happens. Because then it's, you know, if it's up 250, but it still has all of your money, then when it's down, it's like,
You
fuck,
lost your
that's
money too.
all my
Yeah.
money.
Yeah.
You know, so this way, and this is also a good way if in situations where, hey, I can't get any more money in my account right now, but I've got this position, I'm up 250% on it. Okay, let me sell a third of it and put that third into something else, you
Yeah.
know, and
Yeah.
that's how you create money. But if you're up like 80%, don't, because you're going to be giving half of that away in taxes.
Okay.
And then it's like, oh, I put $3,000 in. After taxes, I made $1,000.
Yeah.
You know.
Yeah.
I mean, hey, you don't want to lose $1,000, but you know what?
No,
You
I
don't
get it,
really
I
give
get
a
it.
fuck about losing
Yeah.
$1,000. Yeah.
Okay.
What else?
So
What else?
thank you. Okay. What else? Okay. This is a question that's a little bit outside of the realm of trading and stocks and all that investing, but I'd like all your minds on this because that's helpful to me. So I'm renovating my cabin upstate and I'm going to spend more than I planned to do it because I want to do more than I thought I wanted to do when we first bought it. So I have some money that I've battled with myself. I want to put it in the market, but I need it to do a renovation. So do you have any thoughts on how else I can get money and I can still invest the money I have?
I feel right now we should just turn this over to Sasan. Unless, of course, he's going to be retarded, Sasan.
No, Sasan, you're on mute. That's why we can't
You're
hear
on
you. We can't
mute.
hear you, Sasan.
Oh, I mean, I say
Oh,
only
good.
renovate if
Okay,
it
okay.
goes
I'm
up
on.
in value.
So
Yes,
the-
yes.
yeah, well, renovations a lot of times will increase the value, but the money towards it. So here's the roller coaster I went on. I bought a place. I'm trying to renovate it before we move in. The place ended up having more tax on that I expected. New York has tax on mansion tax, mortgage tax, everything. So I didn't have the money I needed for renovation, but the renovation started. So now I call Bottom and I'm like, hey, I think I got to pull money out.
Okay, so whenever Sasan has a seizure, I'll step in. So he was basically like, hey, you know, I need to sell some stuff, blah, blah, blah. And, you know, and we basically got to the point where I said, you know what? No, okay? What you need to do is, first of all, you knew this shit was happening. So why
Wait,
did you?
so let me,
Oh, he's
let
back.
me just
Okay.
tell her the punchline. Okay, I didn't know I was cut out. So I took out a home equity line with
Okay.
Bank of America. It's 2.5% interest. It's basically free money. And
Yeah.
they even have there's some loans that you can get for a home renovation. And
Okay.
you can get it on the cabin that you got. So they'll give you up to 50% of the amount you paid. So if you put 20% down on it, you've already got 10% of that back. So mine was, I put 400,000 down. So I have a pretty good credit line. It takes 8 weeks to get it though. So you
Yeah,
just have
yeah.
to come up with the cash.
I had a home equity on my primary residence in Brooklyn. but I refinanced and it's not closed my refinance yet. So I can't open my home equity line until my refinance has gone through. So that is a consideration. I was trying to see if you guys had any more creative solutions to getting cash.
The other thing I did was my Visa has I can get up to 25,000 out for it is 9% interest, which sucks, but I'm planning on this being temporary. So
Yeah.
I'm gonna pay it back hopefully in a month. Now it's 9% annual, so you'll pay a percent on it.
Yeah.
About so it'll
Okay.
be like $250 on 25,000.
Yeah. What about that
and
money
then
from the market? What about the margin money? Can I
Yes,
use that?
you can pull
Oh,
that.
yeah.
You can pull that.
So,
Now, what you can pull is, it would be the equivalent of the amount that you have for like non-marginable security,
Yes.
non-marginable equities, right?
so, but okay, so I want to, like, if I want to try to apply for that margin, whatever, the one that we talked about, I have
Portfolio
to just,
margin,
yeah, portfolio margin. Yes, that's it.
you need to have over 100 grand in the
Over
account.
100.
Yeah.
Okay, so that's, if I can get 100 in there, and how much would I be able to pull out on portfolio margin?
I don't know that, you know,
Okay,
it's,
sorry.
the margin amount that's created is based on the holdings that you have and how much of your own money is in those holdings.
Okay.
You know, so but it's not unrealistic that it would be a double, you know.
Okay,
if you had
just because I know
100,000,
the
they would
rates
give you
on, the
100,000.
rate I have with that is very low. It's a very good rate. So
Right,
that one is
right.
one that I
It's
wouldn't
like
mind paying on.
one and change
Yeah,
or whatever.
exactly.
Yeah.
Okay, so those, sorry to throw you guys off the rail.
Yeah,
That's
no
just been on
worries,
my mind.
no
I
worries.
appreciate the
Okay,
input.
cool.
And then I did do a little work on the infrastructure thing that we talked
Yep,
about, and I
yep.
didn't come up with 5 to 10 companies. So I'll just pull out like a couple that I
Yeah.
thought made some sense.
Uh-huh.
One is Vale, VALE. Have
Oh,
you
yes.
guys looked at Vale?
They're what? They're like a steel company, or there's some kind of
Um,
something.
You know what? To be honest, I read about it, but I don't remember
Yeah.
which ones. I read through so many companies. I was mostly looking at the charts. And so what I noticed on the chart is that its PE is reasonable, and that over its lifetime, it's had higher points, and with the infrastructure, that it's likely to, get a bunch of business through that process. That's, yeah, and it didn't do a big run up until now. That's why I was
Right.
thinking that one. Any thoughts on, like, I'm not even sure about infrastructure, because again, it's one of those things that might have already been
It's
priced
everything.
in.
It's
Yeah.
everything. First of all, infrastructure is everything. Now, it's not just physical infrastructure, it's human infrastructure, which actually makes a whole shit ton of sense. It's everything from education to, whatever. It's not just roads, it's the EV infrastructure, it's all of that. I mean, if he can pull it off, fuck, man, they should stick him on Rushmore right up there with the other 4 guys. Because this can truly be transformative for the country. But that's also, if a company is involved in something that is 20th century, I don't know that I want to be involved in it. Even though they may be making a lot of money and all of that, I look at it as, you're doing yesterday's shit. Now, if it's like, hey, we make steel with nanotechnology robots built in, I'd be like, okay, that's new steel. Let's check that out. Like, apparently the new steel company is this company called Nucor. But for
Oh
me,
yeah,
it's
Nucor is
like,
on my list too.
right.
It's
It's
on my
like,
list.
it's a steel company. It's like, when I think of like 1980s Tom Cruise football movies, I think of steel mills and, that kind of thing. I want, like, for me, if I'm thinking about a manufacturing plant, I want people in white lab coats. I want clean. I want like semiconductor chips being made. I don't want like a lumber yard or shit like that. Those are commodities, and they're not highly priced. Even not all semiconductor chips are like Micron is very different from NVIDIA, so I just, for me, I just look for, I'm not looking for the ditch diggers, I'm looking for, the beautiful geeks. They can both win the homecoming, but they're also gonna create the little nuclear reactor for the freaking science fair. And I think there are going to be a huge number of companies like that in the infrastructure play. It's why, like last week, I decided to go back to taking a flyer on Workhorse, because of that whole postal service transportation conversion, and they got fucked. And there's a bit of a Amazon Microsoft kind of thing between them and this other company, Oshkosh, and that's the whole thing. Is it's like, if you can start looking at the future plays that are within infrastructure and finding companies within those will be the gems. Those will be the gems. But like I also said, it's not about finding the needle in the haystack. It's just about finding the haystack, And that's why I'm like, I don't want to get down on the granular level of investing in companies that make the components that go into the iPhone. I'll just invest in the iPhone, and you have all of these people who are like, well, you can invest in Apple by investing in Foxconn or I'm like, why? Why don't I just invest in Apple? And so to me, that's why it's like, I don't want to invest in the battery, the lithium, or this. I'll just invest in GM because they'll be putting all of that shit in their cars, and I get to the end. I'm like, how does this manifest itself? I'm just going to put it in that. Yeah, that might not be a gigantic rocket ship like the component. That could be a gigantic rocket ship because the thing that it goes into is a giant tanker. It's gonna, but for me, I'm fine making money consistently. And with options, you make it on an extrapolated way.
Mhm.
That's also why you don't need to be looking, oh, I want to find a company that's gonna go up 1,000%. Why? If you play the options right, all it needs to do is go up 30% for you to go up 1,000%.
Yeah.
So that's kind of, like all of these infrastructure plays, Deere, Caterpillar, all of these steels, these were the people that were talking about them 6-9 months ago. Fucking brilliant. Every single one of them, At that time, I was like, fuck that. I'm buying Apple. I'm buying Square. I'm not buying that. And those were all great. But so were these. And at that time, they were throwing them out, But now, they've had insane runs. And so whoever's getting into them now is really going to end up catching the last 10% as it goes like this.
Yeah. No, that's why I was looking at the charts, and that's why Vail came up on my list, because that was the one that didn't seem to have a huge run yet.
Yeah.
So I thought that was like, and that's what I was thinking, that a lot of these things have already been played out, and that's why like my list didn't get.
That's the most important thing. That's the most important thing. I know Amar says I hate charts, but that's what I look to charts for. They tell the story. Is it played out or not? Tina, do you have anything else? Because I know you've got family, you've got kids, dogs, all of that stuff.
No, I'm good.
You're good? Good. Okay, cool.
Can you hear me now?
Yeah.
Autumn?
Yeah.
I'm going to have to go in a second. I just wanted to make my case for Palantir.
Yes, please.
So we're at like $23 a share right now.
Right.
They have paid off their debt for the first time. They've had good earnings for the 2 quarters that they've been open. They are essentially, now the banks have credited them, twice as much as their credit was before. And then if you look at the whole chart thing that Amar loves and you hate, it's also doing a good crossing. It's above 50 and 100 day, and it's crossing the 200 day. I think this might be the next 2 weeks, might be a good time to keep an eye on it. I bet it'll go to 30.
Okay, so what are you gonna do?
I'm gonna keep my positions because I don't have any money. But,
Okay.
But I'm hoping, I want to throw that out there in case somebody does have money, it's gonna do well, I think.
All right. But I mean, it's a company I'm in, so I can't poo-poo it. I am, however, out of about 80% of the position that I was in. But I do agree that I feel it has bottomed this 2021 level. It's not going through that. You know, it needs to have a good earnings and get a, you know, I'm sure with the infrastructure shit, they'll pick up some more government contracts and it'll certainly be a good thing. It's a solid company, no doubt, no doubt.
Okay, I love you. Thank you for doing this. I gotta run.
All right, man.
Bye.
All right. Love you.
Okay,
Love
see you guys
you.
next week. Okay, love you
Okay.
too. Bye.
See
I
ya.
have to run as well. I
Okay.
have to run as well, but thank you so much. And
All right, man.
keep
Okay.
chatting with you on the thread, okay?
Okay.
All right,
Talk to you
bye.
later.
All right, take care.
All
Bye,
right.
guys.
See ya.
Later on. Has anyone taken a look at the upside chart? Has anyone followed along with those or anything like that?
I'll be honest, I have not had a look at it in about a week. I looked at it like before, but I don't get to it every day. That's it. That's just the truth. I have not
Okay.
looked at it every day. Yeah.
Okay. Because like, you know, I placed multiple trades with them. I haven't, you know, like a couple of weeks, but I'm still maintaining all of them. And they've all been working out. You
That's
know,
great.
they've all kind of, the whole point is, you know, you're taking the position as it's crossing above the 50-day. So from that point on, you're just, if it's staying above the 50-day, you're staying with it, you know? And if it's staying above the 50-day, I mean, yes, the stock can roll over and the 50-day can roll over, so you can actually be dropping and still staying above it. But even if that happens, and that usually does not, you know, most of the time, if you're staying above the 50, it's climbing.
Yeah.
You know, and that's all you're doing. So when I bought them previously, when I tried this, I would buy short-term options. I would be like, okay, let's get something cheap that's, you know, 2-3 weeks out and pick up a little bit and then that's it. But this time I treated them just like any other option position and I bought them, you know, out in January 23. So now they're all like, you know, bopping right up on that trend line and, you know, sideways, a little up, but I'm hanging with them. And, you know, they've had like, boom. And I was like, oh, wow, should I get out of it? And then no. And I was like, oh, I'll buy some more. But they're still above and they're still moving. And, you know, Nike dropped a little bit below, but it's because of that political China bullshit, which will blow over and et cetera. And this was also the first time I ever got into Nike. And that's something I would recommend now because the impact on it is political. You know, it's not like they lost a bunch of athletes or their sneakers are shown to cause, you know, some kind of foot injury or anything like that. It's politics and politics
Blows over.
Yeah, it comes and goes.
yeah. It's all flexing. It's all flexing, you know, and then they'll unflex, they'll unclench. Anything else?
Cool.
Anyone? Anything?
I'm good.
All good?
I mean,
Okay.
Thanks, bye.
I have one-off things, but I'll actually
Okay.
like maybe I'll text you. Maybe if you have time, maybe in the week we can have like a 30-minute one-off
Sure.
conversation.
All
Okay.
right. See you, Irene. See you,
All right,
Rod.
see ya.
Bye.
See
Thank
ya.
you. All right.
Bye.
All right.
All
Bye. Thank you. Talk to you later.
All right. Adios.